Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, on this triumphant Tuesday for another YouTube video. This is going to be our daily cryptocurrency market update, where we not only explore the cryptocurrency market, we also look at the external markets around us that have such a bearing on our small but significant market. We're going to be talking about why is Bitcoin seeing a bit of a rally, why are altcoins seeing a bit of a rally. This is something that we spoke about in yesterday's video. We went long yesterday, and we're very, very right on that idea. We kind of knew that maybe the crypto space was going to have an okay week, certainly the stock market, based on how the GBP USD and the AUD USD opened in terms of the intrabank on Sunday night. This gave us the kind of idea that potentially the dollar was going to have a bit of a pullback, and this is actually going to be good for the risk on asset class. So what does that mean today? We're going to be getting into it. We're going to be diving down the time frames, doing a little bit of TA on Bitcoin, also looking at the dollar, looking at the stock market, which saw an amazing rally. I have to say that the price movement for Bitcoin is absolutely pathetic, because the stock market is outperforming it. Even yesterday, gold outperformed the stock market, the FTSE 100. These are far, far larger markets. I think even to a degree in terms of percentage move, the Dixie outperformed Bitcoin. And that, for somebody that trades this market, is kind of worrying. It shows a very low interest. And what to take from that, I'm not really sure. When you guys look at, one question I always get is, oh, well, dude, you know, Binance has, look at Binance's volume. Binance's volume is totally fake. If you look at Binance's volume compared to any other exchange, it just doesn't equate. It doesn't add up. And this has a lot to do with their free spot trading fees. And of course, algorithms will be all over that. Lots of crypto volume full stop is fake, by the way. It's bots, it's wash trading, it's algorithms. So we are going to look at all that. Definitely do some TA and price analysis on Bitcoin. I also want to talk about the sort of wider situation, and talk about the fact and really reflect on and continue to bring up what took place with the UK bond market, because what I believe we're moving into, ladies and gentlemen, is potentially a debt failure. I think there is that much debt out there that we know it can never be repaid unless they printed the money supply to infinity, which is why we're ultimately bullish on anything that is pegged against the US dollar or the Great British Pound or any of these fiat systems that are debt-based. But essentially, I think we're looking at a serious debt failure. And we saw that starting with the hedge funds in the UK. Hedge fund Titan warns United Kingdom pension crisis is just getting started. And I believe this is the case. And in actual fact, I believe, and we're going to bring up the yield curve, which is something that we looked at the start of the year to kind of say, this isn't good. Potentially, you know, this is forewarning of a capitulation that's coming. I don't think we've seen that capitulation yet. I think that is still to come. And I think that goes potentially by the end of this year into the start of next. And I think that this yield curve inversion, the last one we had predicted the March 2020 crash. We had the 2008 financial crash predicted by the yield curve, the dot-com boom and bust, and then we also had the crash of 1989. This yield curve, I think, is actually going to be labeled the debt implosion or the debt failure yield curve. And the problem that you have is when debt fails, it brings a lot of things with it. Mortgages, you know, if we see record defaults, if we see pension funds, you know, go insolvent, that has a trickle-on effect with people that are reliant on those pensions. Also, that's going to cause more of a grab and a push and a run for liquidity, for money, than we've already seen as people flee assets. And remember, the bond market, the treasury market, is the largest asset class in the world, obviously barring the FX market in terms of value. But this is, you know, it's very serious. Right now, guys, as an investor, and this is why we're out of the markets, largely we still have some crypto exposure, just in case we're wrong, and we could be wrong. If we're wrong, and this is the bottom, by the way, guys, we don't lose anything. In fact, we've doubled our Bitcoin holdings, we've tripled, quadrupled, even 10x some of our smaller altcoin holdings from when we got out. So we'd be a happy buyer here. My issue is that you're swimming in very much shark-infested waters. There is so much going on at the moment, not to mention what's going on in Ukraine and Russia. The UK is just a complete mess. I was going to actually talk a little bit more about the UK today, but I can't even be bothered. It's just a disgrace. This is, you know, and the thing for me is that really, really winds me up is it's kind of like, you know, they're blaming one individual for this, when in actual fact, this was going to happen whether we had that mini budget or we didn't. Okay? This was going to, in my opinion, happen anyway. And it's not really to do with the governmental decisions, although they do play a factor. It's more to do with how the entire financial global system is rigged in the dollar's favor, and that you have an intra-country, an intra-global bank war going on now, which essentially is seeing the dollar eat everybody's dinner. And this ties in. And why are we talking about this as a crypto channel? Well, how did we know that we could long yesterday and we had a good probability of being right? We didn't know, by the way, that the market was going to go up. It's impossible for a trader or an investor or speculator to be able to give you a 100% guarantee. What you can do is look at the variables and come up with a probability-based scenario that may go in your favor, and you take the higher probability bet, basically. And that's really all trading is, to a degree. And certainly investing, if you're actually a smart investor. Most people are investors. They've never even looked at a chart. It's what we're here to teach. We want you guys to be active and smart investors and move with the smart money. And the smart money on Sunday night told us that the dollar was going to have a bit of a break, which we saw, and that was probably, given the correlation, going to be quite positive for the cryptocurrency market. And yesterday we got that. We were right, not because we're geniuses, but because we are paying attention to everything that's going on. So we will get into quite a bit. We'll also talk about, I continuously see, you've got to remember with the crypto space, by the way, guys, it's still in infancy. It's not even regulated yet. This is the new asset class, and it's going to be too late for people to realize it. We're going to, in my opinion, see lower prices for Bitcoin. And I think at that point, people will be too scared to buy it, which is when people like me and my community will be stepping up to the plate, seeing this for what it is. It's a technological revolution that is going to change all of our lives, in some cases for the better, in some for the worse, and really get on board with that. But we will get into a number of other things. Let's just really start by doing a bit of TA on Bitcoin. So it wasn't really a nice, we'll get the volume off here. We don't need the Bollinger Bands. We'll get rid of those. It wasn't really a spectacular rally for Bitcoin. It just looked like, you know, that was gonna be the play. And essentially, Bitcoin has just been in this range for, I think, about 130 days now. Yeah, around about 127 days. The last time we did something like this was here. That was, of course, led to quite a significant spill to the downside. And we do expect that to be the case today, ladies and gentlemen, or not today, but with this current structure. To me, you are essentially, and we spoke about this time and time again, you know, you're just basically on a ledge here. And once you break this ledge with momentum, you know, you enter some sort of a free fall, in my opinion. You know, this is what I think you're looking at. And it's very common, and this is why we sort of got out of our swing shorts. We took the profits on them and then actually entered long yesterday, looking for those swing shorts to take us to the downside and make some money on. It's very common before you see that sort of trapdoor open that you get some sort of a final stab to the upside. This is what I can essentially envision. Some sort of a stab. Maybe you run this, you just take everyone's stops, grab that liquidity before going to the downside. This is kind of what I'm looking at. It's very, very common for you to do this. You can see you sort of form this floor. You always typically have one final push. The problem with longing the market right now, which is why we're not looking to hold any longs in terms of swing trades, we're just looking to day trade it and take whatever money we can from the markets, is essentially, you know, we are, again, in shark-infested waters. With everything going on, guys, it's only going to take a very small catalyst, whether it be the UK messing things up again or something happens in Europe that brings dollar strength back. It's only going to take a very small catalyst for this market to sell off. The real question for me is, what is the dollar going to do here? You know, looking at, so we've established that Bitcoin and the market's really rallying on the back end of dollar weakness. Also, that there's always, when you have a build-up of pressure to either the up or the downside, there's always some sort of alleviation of that pressure. So markets don't just go down in straight lines. It's why they take rest points and sort of pull back slightly before you get that continuation. Elliott wave theory talks about this very, very accurately. One thing I'm looking at is, you know, what's the dollar going to do here? Is it going to find this and sort of find what has been previous support now as resistance and continue to come down and have more of a sustained, potentially a double bottom period? Or your double bottom could come here. It just really depends. This is the big thing for me, because if the dollar does continue to sell off, and it doesn't have to, again, there's many catalysts that could cause strength in the dollar, then essentially, you know, if we do get this sell-off, I think that's going to be very beneficial to markets. And I think that that's, you know, going to see continuation to the upside. Again, you don't want to be heavily biased long, I don't think, for the simple reason that, you know, anything could trigger this. Bitcoin is holding this period of consolidation. So on the way down, we shorted this and we said, look, if you can stay here, you're going to get further short and then look to take profits into this area of liquidity. You've now come back above it. You've found it as resistance. You've come up, and are you now flipping this as support, ready for a further move to the upside? Do we get back into the 20K zone, maybe 21K? Potentially. But the issue is, I mean, how long do you really want to ride this for? Because I think the eventuality is that we do see that, you know, spill like we have previously take place here. And we see all the bottom callers coming out of the woodworks. Like I say, if this is the bottom, so be it. We haven't lost anything. In fact, we've gained and been very right on what we've been talking about. And we've got plenty of time to get back in. I'm not interested in being the first person through the kind of door with a war zone going on in the other side of it. So we're happy to stay out for now. Really, it's going to be a case for me of watching the dollar, watching the US Open. US futures are up. Potentially, you're going to see some sort of something similar. You know, this is where we think we are. We spoke about this time and time again. Potentially you see, and it's not out of the realms of the possibility that maybe you get some sort of a rally here and then we get that continuation. The problem for me is I'm ultimately expecting this to take place. This is obviously 2008. I'm expecting this kind of a drop or continuation to really take place. I don't think that this is over by any stretch of the imagination. And ultimately, you know, whilst governments and central banks around the world are so fixed on fighting inflation, which is still persistently high, we had that really bad news in terms of the CPI print. You know, liquidity continues to get drained, and that's without some sort of a systemic failure, which will cause an ultimate run for liquidity. So I don't think we've seen that real liquidity squeeze and draining from markets just yet. I think that's all on the horizon, and I think potentially it's going to have a lot to do with the debt failure. We already know that pension funds essentially were told to sell their bonds. What were they selling their bonds for? They weren't selling it for Tesla or Apple. They were selling it for cash. This is what I mean about a systemic failure that causes people to flee assets into cash. I still think that's to come. And who wins in that situation? The people like me and hopefully you guys that watch this channel daily that are stablecoin heavy, certainly US dollar stablecoin heavy, as we understand the FX market and why the dollar has every reason to continue going high. I don't think this is the top for the dollar, which means that I don't think this is the bottom for the markets. I just think it's having a bit of a rest, a bit of a pause before we see that continuation. It's going to be something to watch today very closely. This was interesting. Hedge fund titan warns United Kingdom pension crisis is just getting started. For one of the world's biggest hedge funds, the United Kingdom pension fund disaster is just beginning as central financial institutions close to the environment, increase desire fees, and convert off quantitative easing. Most examined from Bloomberg. Paul Marshall, co-founder of 62 billion expense organization Marshall Wallace, or Wace, said central banks experience created the ideal environment for a malinvestment by artificially keeping curious costs lower for years. So the thing is here, whenever you suppress something, it pops up somewhere else. So because they've essentially been just doing QE, 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 we're now at the fallout of that. So markets have just gone up since 2008. Okay, well, that's under a certain pretext. That pretext and that context is no longer relevant because the whole game has changed. So we have to essentially adjust and go, okay, well, is there a fair value that things need to be that needs to be reached before we start investing again without those conditions that led to the prices that we currently had being in place? You know, it's very, very interesting what's taking place right now. In my opinion, it's exciting. Yes, there's going to be a lot of hardship, of course, and we're not excited about that. And of course, we're very sort of sorrowful in regards to all that. However, you guys have got the opportunity of your lifetime coming in front of you. Certainly, if you're new to markets, new to investing, it might seem like a really bad time to be getting involved. But in actual fact, it's the opposite. You know, when we get these lower prices, you're essentially going to set yourself up for generational wealth to come, in my opinion. Certainly, if it takes place on the scale that I think it is. 10 million of Italians aren't able to buy grocery shopping. You know, the situation is dire and it gets worse. Inflation is just as wealth destructive as interest rate hikes, and it's actually more damaging for the masses than really, you know, the sort of upper class. The upper class kind of suffer because they're all very debt leveraged, a lot of them, and they work on cash flow with interest rate hikes. But typically they have assets that hedge for inflation, whereas the lower sort of parts of society in terms of financial, they're the real sufferers of inflation, and it's persistently high, and it's going to continue to stay persistently high. I think we're entering a very stagflationary environment where we have high interest rates that kill off growth, and we have high inflation that is also very destructive. And this is kind of, no growth, high interest rate, not a great situation, in my opinion. Walmart CTO says crypto will become a major payment disruptor. Absolutely. Crypto is still a technological revolution. The issue is that right now it's just acting like the risk on asset class. A reason being is because it's driven from the same thing that it is, which is money, liquidity, investors. And we're all suffering and having to go through the same kind of ordeal. That being said, I do think brighter days are on the horizon. And I actually could see a large part of the equity market actually coming over to the crypto space and viewing it as the new equity market in many regards. Again, I'm not even going to get into what's going on in the UK. It's just a total mess. And they're just throwing, it's the blame game at the moment. They're all crooks, guys. They're all as bad as one another. They all disgust me. And that's really all I have to say on it. This is a problem that is far bigger than any one individual. And it's kind of, it's very blatant to see for anybody that understands what's going on. Still got a bit of attention, or certainly tensions are high in with Russia, Ukraine. This could be a catalyst that sees, further continuation of the downfall. There's so much going on right now. Like I say, you don't want to be an investor. And in my opinion, back to what this individual's talking about, this is just the start of the pension crisis. I honestly think you're going to start to see a lot of debt defaults, and this is going to have huge repercussions and knock-on effects, just like in 2008 with the mortgage crisis that we saw. And this potentially, in my opinion, is going to have to lead to bailouts and further proliferation of the money supply, which is when we get in as investors. Lots to unpack in this video, guys. We've done the Bitcoin TA, we've done dollar TA. We're also looking at the wider macroeconomic picture. Hopefully you guys have enjoyed this video. If you have, a like is always appreciated. So is a comment. Let me know your thoughts, any opinions on what kind of videos you guys would like to see from this channel in regards to crypto specifically. I'm going to love and leave you on that note. Enjoy your Tuesday, guys. See you in the next YouTube video. Thanks a lot for watching.